Joining me this morning is Simon Peter Mulima, who is an underwriting officer at ICEA, and Robert Katabaire, who is a fund manager, ICEA Asset Management. Good morning, gentlemen.
Yes, good morning.
Thank you so much for joining us this morning. I'll start with you, Robert. There's what you guys call the unit trust.
Yes.
What exactly is that?
A unit trust is a pool of funds. Money is collected together and reinvested. You collect from a number of individuals, organizations, saving societies, and the like. The advantage would be why you're collecting is that the individuals you're collecting from do not have the advantages to invest as individuals. So when this money is pulled together, you're able to, you have a much better bargaining power when placing the investments. For example, if you're going to invest with a bank or central government, then in that position, the individual investing in the pool has an advantage compared to if they were investing on their own.
They sound like either group investment groups or circles of sorts.
There are similarities in that investment groups and circles are coming together to pull monies together. In most cases, investment groups are investing for purposes of, are collecting for purposes of investing as a group, having that advantage as a unit.
Right.
Now, the unit trusts also apply in the same sense that you're pooling money together where I, as an individual, say if I had 1 million shillings, I cannot compare with another who has, say, 100 million. So you're in a better bargaining position with 100 million than with 1 million. So that is the advantage that unit trusts try to give the unit holders that have invested in them.
So it's a block, for lack of a better word.
Yes, it is. It is a block because you're getting various kinds of investors, whether individuals, institutions, circles or investment clubs. All these can pull their monies in the unit trusts and then get a better rate than if they're investing individually.
Oh, so I, Brian Mlondo, can say I am starting the Mlondo Unit Trust or something and invite investors?
Of course, now you would have to be licensed to do that. The ICEA unit trust funds are licensed by the Capital Markets Authority. For you to be able to do that, CMA has got to give you a license to collect funds from the general public.
Okay.
As an individual, you may not be able to do that. But if you approach CMA and obtain the license, then you can do that.
Are there different types, you know?
Yes, there are different types. What we have currently is what we call the money market fund. The money market fund is more like for conservative investors who are looking to maintain their principal. For example, if you gave us 1 million shillings, that 1 million shillings at all times will stay intact and earn interest over time. Now, for savers that are targeting something, for example, to acquire an asset or to pay school fees, you could use this fund for collection purposes. Say over 2 years, I want to collect 2 million or 3 million, then you can use this fund and contribute on a monthly basis until you get to what you want. The other fund is the balanced fund. The balanced fund invests in fixed deposits, government securities, and shares. And the key element here is the investment in shares, because the fact that the value of your investment can go up or down is also influenced by how the shares that we've bought have performed. Now, it could happen that they're not performing well, but it could also happen that they are performing above expected. But investors in this fund are more likely to be looking at investing for not less than 3 years. These are medium to long-term investors.
Right.
Whereas for the money market, it could be up to 1 year of investment.
All right. Well, we also have what you call the personal retirement scheme.
Yes, indeed.
What exactly is that?
I do believe that even you, Brian, you plan to retire one day. You're going
Very
to
soon.
Not very soon, but what we have in place is that we have a plan where you as an individual, you can come in and make an arrangement with the insurance company of West Africa. And ICEA Life Assurance, for in particular, will receive your contributions over time. And these are going to be invested, also pulled together, like Robert was saying, for to prepare for that time when you decide, say, okay, now I'm out of employment, I want to go and live a nice life at the beach. Yes, exactly. So it's just a pool. You make contributions more so like on a monthly basis, on a quarterly basis, on a half-yearly basis, and these are invested to make sure that at that point in time when you need them for retirement, the funds are available for you to take home and either buy an annuity or spend depending on your plans at that point in time.
Is there a particular time when I can start saving?
Good.
For that particular.
You see, the problem is that most of us live like as if you're going to live forever.
Yes.
Or we work like as if you're going to work forever. Most of the times, the best time would be as soon as you begin working. But what happens when you begin working? You want to go and club. You have to go and buy that beer. So you want that nice life, but without thinking about what's going to happen after 15, 20 years. So the earliest time you would begin to save a personal retirement plan would be as soon as you begin working. You begin thinking about that. Brothers and sisters in the developed world have already a mechanism which are in place to help them. But for us, we must plan for it ourselves. So the earlier, and you see the longer you save, the bigger the fund. Of course, if you plan to save for a short time, then you're going to end up with something small. But if you do it for over a long time, you'll be surprised. The principle at play here is what you call compounding. Now, as you know, compounding, you multiply, things are growing at an exponential rate. So the earlier you start, the better.
Is this the same as NSSF? I could say you are now a player in retirement. What NSSF is doing, what Makerere University has under NIC, is that the same?
Now, what you need to take in note of is also the regulatory requirements in place. NSSF, that's a mandatory contribution, the 15% you do. Every employer who has at least 5 employees and above must make that contribution. This is something you do aside. I mean, most of the times you plan and then you get there and you find that maybe the funds are not enough. You need something extra. There's nothing wrong with having something extra. So what NSSF does is the mandatory bit, which every employer must contribute to, apart from a few like the military, the police. Yeah. I think also Makerere is also one of those who are exempted from making those contributions. Yeah. So this is way different. If you do this and you're employed, say, at NTV, at ICA Life Assurance, the employer must also make contributions for you at NSSF. So at the end of the day, you have something bigger. It's good. It's good for you.
Right. Yeah. Is there a minimum that you say, for example, if someone earns this much, they definitely can't start a retirement scheme?
Well, this plan has been structured to take care of a lot of needs for a lot of people. You can, as little as 50,000, you can start. Let's say Rome wasn't built in one day. The small that you have is what you can put in place to grow your fund. Yes. So as little as 50,000, you start. Yes.
Robert, is there an age limit for your particular scheme?
No,
unit trust.
There is no age limit. Anyone at whatever age can come in, for as long as you're 18. If parents would like to invest on behalf of their children, then would have to invest in trusts of the kids. But like Simon has mentioned, it's always better to begin early to save, because the minimum you can invest, for example, in the unit trusts when you're starting is 100,000 shillings. Then subsequently you can do top-ups of 50,000 regularly every month. But we also allow you to bring in lump sums. You could have managed to get a windfall somewhere.
Yeah, 1 million. Can top up.
Yeah, you can. You can top up.
Double.
Okay, but for us Ugandans, we are always asking, how can is there a guarantee of the returns?
The return is not guaranteed, because it is dependent on a number of factors. One, the investments that we are making. If we are investing this money in fixed deposits or government securities at 14%, we can say probably you may get about 12, maybe 11% after the various charges have been made. But we can't guarantee a return. But we can give you projections of what we expect to happen. such that you can also have a picture of where your return might be.
So, since you are the expert here, how long do you advise someone should invest? Or when they realize things are not working out, how can they withdraw the money?
Of course, investing longer is better, because at the end of the day, you will have something that you can fall back to in case of any eventualities. In terms of exiting, you can exit at any point because our funds are open funds. Anytime you'd want to say, I want to take my money away, you can always take it away by filling out the necessary documents.
All right. Well, there's a question here for you. Will my social security benefits be decreased if I have a retirement plan?
Wow, that's a good question, Brian. Actually, your NSSF, social security basically is what you're going to refer to in this case as NSSF contributions. They won't decrease. They have to be, they are mandatory. It is, the Parliament of Uganda has come up with that and said that for every employee you must make 15%. So the personal, what you make in the personal retirement plan is just a top up on that. So they won't be reduced. They remain the way they are.
Can't you, for example, ICEA, be able to negotiate and say, okay, I have opened this one for you, at least I should be saving maybe a 12%, so that, because the income does not change. You know, the money where NSSF draws from does not change. It's the same account that I'm going to use to do the retirement. Can't you give me maybe a lower minimum to deposit?
Lower, less than 50,000?
Maybe less than 50,000?
Brian, okay, I talked about 50,000 because even us, as people who are going to be taking your money, we want to take on something that's going to give you something good enough. I mean, you don't want to do an investment of 30,000, 20,000, and at the end of 5 years, it's like you haven't been doing anything. You want to take, of course, you know, the bigger your fund, it also attracts a bigger interest.
Yes.
So for someone who did save 50,000, someone who is saving 1 million per month, they're getting, they'll get different rates of return at the end of the year, at the end of the day. So what on our side, we won't say that, of course, you're contributing 15% to NSSF, so NSF, and you are also contributing at ICA, so let NSF be reduced. No, that is, we cannot do that.
Right.
But we just advise you to keep growing your fund and for the benefits, which most people actually begin to appreciate when they're receiving the money.
Finally, the detail is in always getting my money back when it's time for me to retire. You know, and I'm sorry, I'm using NSSF here as the example, but you hear so many people complaining about when I die, the money is never there. My mother died and they refused to give us our money, blah, 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 blah. What's the plan there? How do I get my money?
The way we do it with the personal retirement plan at ICEA Life, the arrangement, the agreement is between me and you. So you have the contract signed, and you have a contract from us and it's signed by you. It's not between you and your employer. So many people actually do save, and some of them take it even before they have gotten to time of retirement. And all they have to do, they have to notify us. I'm so and so, I want to withdraw from my fund, please prepare. And then we do make the preparations for that. It's not,
you advise them to stay on, because you know some of us may make those rash decisions. We have problems. I have my retirement. Let me use the money.
Okay, what usually at the point of paying this money, we should have to sit with you and you tell us of some of your problems, of why you would want to pull out your money. And most of the times, these are understandable problems. So depending on your situation is different from my situation. So I'm not going to impose on you. And besides, this is your money. So if you want to take it, you definitely take it. But of course, we advise you on how best to utilize that money.
Right. Well, if you're just joining us, talking to ICEA experts here, please go and visit them at Rwenzori House, and you can get more details.
Rwenzori Court.
Rwenzori Court. Simon, Robert, where do I get the forms? How do I just come to ICA and ask for you guys, and we can start these accounts? How do I do that?
Yes, you can visit us at our offices, Rwenzori Court's second floor. For anyone who might be interested in starting up with the investment, it's a quick process. I think 5 minutes, we're done with filling the form.
Awesome.
Then you can start remitting money to accounts which are provided for in the form.
What if I can't make it to Rwenzori Courts? You know, I'm a tech guy. Can I go online somewhere and I fill in those forms?
We do have forms. Okay, you can contact us on email. We can send you the forms and you can scan them back to us.
What's the email?
Our email is, different individuals, like you write at simon.mulimata.ic.co.ug, or you could write at, because no, these are two different companies.
Okay.
But then you also can access our website. We have a lot of people who move out in the fields. You can always talk to these people and they always get back to us with the details. It's a very quick process, and we make it as smooth as possible for our clients.
Fantastic. Gentlemen, pleasure. Thank you so much for coming. Well, you need to start planning now so that you don't get any surprises in the future. And good things that ICEA are also helping us bring everyday life to you every day of the week. So catch them, go to Rwenzori Courts next to Rwenzori House. Yes. Okay, and that's the new building, the big building. That's where their offices are, and you can get more details about this. That's all we had for you on Everyday Life. Coming up,